So for those of you that don't know, Frank is like the godfather of mobile home park investing. And I learned so much of what I know and what I do because of Frank. In fact, I'm closing on a park today. And I reached out to him this morning, even prior to this podcast. And I said, hey, got a real quick question for you on something. And so I still use Frank as a resource as often as I can. But I'd love to hear, just kind of how you got your start. I mean, I know this story, but I think it'd be great for people to learn it.
Sure. Well, Justin, it's basically I got out of college a year early, started a billboard company, never intending to do that as a career. I thought I would sell that off and go to business school, but I continued doing that. I sold it off after 14 years, and then I had to find something new to do because I was in my mid-30s. So I called around various people that I knew as either advertisers or who had built billboard on their property. And one guy I called was a guy named Ron who had a mobile home park called Glenhaven that I built 2 billboards on. And he sold it to me right there on the phone on one call. He told me he would want 400,000 with 10,000 down, and he would carry 390,000 for 30 years. So I said, well, Ron, obviously you seem fairly anxious to get this sold and your terms are more than attractive. So I assume it's losing money. And he said, yes, that's correct. It's losing $2,000 a month. So that's how I got my start with a old beat up trailer park in the wrong side of Dallas that was losing $2,000 a month. Not a very smart beginning for most people, but I thought it was a challenge and I'd learn a lot, and I assumed I probably would end up giving it back, but it worked out and I kept it.
That's awesome. And in fact, there's so much to unpackage just in this. So first of all, you had a nice exit on the billboard business that you had. You had some cash that you needed to deploy. This is an asset class that you had no idea about. I mean, it's not like you'd been studying these things. I mean, it was just, as I understand it, kind of like serendipitous timing where you called someone who owned a park, he was selling it, you were able to get him to seller finance this thing. And for those of you listening, or those of you watching, here's the thing with seller finance. Mobile home parks are one of the only places that you can go in real estate where you regularly get sellers to finance it. You don't have to get a bank loan. They'll actually carry the note, which is what happened in this instance. And so that's cool. So tell us what happened. They're losing $2,000 a month. Most people would say, no way, I don't want this. But you said, let's do it.
Yeah, well, what happened was, Justin, I figured that $10,000 was not a huge cost for a big education. And I was a little intrigued with the park, I have to admit, mainly because in doing billboards, you work in a world of zonings because billboards are regulated by the US government and you can only build them in certain zonings. And I noticed that classification of mobile home, MH, was the rarest I had ever seen. So when I built those 2 billboards, my brain made a footnote. I had never seen MH zoning before. So I knew it was rare. I figured that with supply and demand, if it was rare, it had to be worth something. And then the seller financing really drew me in because I thought, well, my worst case scenario is I give it back. It was non-recourse debt. So I poured over his books and records and everything he had going on. And there I unlocked the mystery of how I could solve 2,000 in 1 millisecond. And that was, he had a cable bill where he was paying cable for the entire park, all 83 lots at full market rate, no discount. So he's paying back then, what was it, about $25 a lot for 83 lots. He was only half occupied. So he's paying $50, twice retail for the occupied lots. And it was on a month-to-month deal. So I just canceled it. Cable company said I was crazy because they would then turn everyone's cable off. And I noticed many people had Dish and DirecTV discs on their roof. So I said, well, dude, I don't think you're going to impact that many anyway. So we turned it off and I had virtually no complaints from that. And that solved it. Now I'm at 0, but still 0 isn't going to work, right? So 0 doesn't cover Ron's mortgage. 0 doesn't do me any good. So next thing I do is I embark on making the thing profitable, which was basically raising rents and filling lots. So that's basically the story.
Well, it's incredible that you know, had the foresight to be able to see this, to dissect the numbers and say, hey, I can make this move, I can break even, I can make one more move, and now all of a sudden I'm profitable. And I think most people just look at the numbers as is versus how they would actually run it. What would they do differently? What expenses would they cut out? What expenses would exist with your, you know, management should you take it over? And I love that you did that. Something that you touched on that I think is really important is the power of MH zoning. So I'd love to know why this is your favorite or one of your favorite types of zoning, because this is a very unique type of zoning. And there are a lot of, you're basically grandfathered in to, you know, all the laws based on what was passed at that time. So I'd love for you to explain that a little bit.
Sure. Yeah. Just when I got into it, again, I didn't know much about the industry, and the scarcity of the zoning was attractive. As I got more into the industry, I found there were other things to me even equally attractive, such as the fact you can't build any more mobile home parks, which somewhat ties back to the zoning issue, and that the homes can't move. So I love the fact that my customers are very sticky, very easy to retain. And then as time has progressed, the industry has just gotten on the right side of all the curves, right? So now you've got in the US more than ever before a huge demand for affordable housing. It wasn't as big when I bought Glenhaven back in the mid 90s. Affordable housing wasn't a term you heard very much back then, but now that's hot. Just as this new national rampage after COVID to move from urban markets into suburban and exurban. Almost all of our parks are suburban exurban, so that's helping hugely. The issue with inflation that's now popping up in the news, that's good for real estate, great for mobile home parks because we can adjust our rent. So really, I honestly can't tell you of any investment industry I find more favorable based on how everything aligned. Now, it wasn't meant to be that way. A lot of that is just sheer random luck. But nevertheless, right now, mobile home parks, to me, that's the place you want to be.